Huh. One sec. Mm, That's fucking annoying. All right. How's everyone doing? Slipped 60-50 a little bit there. That's kind of bearish. Looks like NQ selling off. Nvidia down 3% today. Nailed that little failure with a call. Nice. Well done, AJ. Always buying the wrong option. Mostly conscious, if I spelled that right. You cat staying out of the air conditioner? Never usually. Put the blue stitching in the black hat. It has blue stitching. Is Straddle gonna print just from Ivy alone? I think I stopped out of the... Nope. I still have the pit side. Um, I'll probably try to hold it into the meeting, unless we get a big swing one way or the other. I'm straddled a little high, though. I'm straddled at 70, so... Yeah, we'll see. Yeah, FOMC today. I accidentally made money the other day, cashing out a small chunk of my over-allocated NVIDIA puts. Oh, nice. Yeah, I closed a few in the early morning yesterday, because I had some that were pretty old, that I bought a while back with a slightly higher cost basis. So I closed those out and I kept like the newer ones. Today's a super dangerous day to trade. I mean, it's more likely that it's just going to be very boring and not super dangerous at all. Thanks, Taka Man. Snapped AVGO call entry with thanks to GS. Saw 205 was supported. So had a chance to bounce there. Nice. It's the full meeting. The presser and everything. Could you get another FOMC like the last one, where it just picks a direction and never stops gooning? If JFresh or JPow cuts rates today, then yeah. JPow called me this morning and confirmed for the 5th straight meeting he will be wearing a gray suit with a purple tie. That's his rate cutting suit. That doesn't sound fun. Rate cuts we do big ups? Depends on how quickly the bond market reacts. Maybe not. The last time they cut rates, we did big downs. So I would imagine that would be still the sentiment. I need some $100 out of the money positions right now. Oh, Jesus. One standard deviation nuke, not $100 out of the money. Imagine if he comes out wearing a GS hat. It'd be impossible. We didn't give him one. I mean, it doesn't matter what the president instructs. The Fed's an independent body. He has no power over the Fed. At all. You have no power here, JPO. I can see JPO not cutting and basically saying, I don't care what any, quote, president has to say. I call the shots around here. Exactly. I said this last night. I'll say it again. JPow answers to a higher power than Trump. And that power is Jamie Dimon. He already said he wouldn't answer to direct orders from Trump. No, he won't. This is why Republicans hate the Fed. Well, all presidents kind of hate the Fed. Because a lot of times you're stuck with the guy the previous person installed. And you really don't have any power to remove him except through an act of Congress. Him and Basant are probably in agreement on a lot of things. We're high. I mean, this is a bounce. Look at the VIX. Mm. There's a bit of bot calls here at 55. Bot puts at 60, so 60 will be a little bit difficult to get over. Let's see, there's a synthetic short at 50. Gaps at 60. Uh, some sold puts at 45. That's 55 is basically synthetic long. Sold calls at 65.70. We probably have a pretty narrow trading range for today. Like for the early part of today. It looks like it's like 50 to 70, basically. They saved my call. That was nice of them. Zero GT, looks like they're selling a lot of the 60-50. And then, yeah, 60-70, 60-80 upside resistance. Not much in between 55 and 65, though. Positioning's pretty flat. So I would say that a breakout above 55 could pretty easily test 70. Provided there's a breakout above 55. Gamma's still positive here, though. So the MM's not so much on the monthly chain, but there's a little bit of positive gamma on the weekly. Any thoughts on Rivian? I like the cars, but I don't know much about the company. I don't really know that much about the company. They spend a lot of money. They don't make a lot of money. Um, they have some big backers, which has given them more validity on the EV stage than a lot of other companies. But I mean, they have a long way to go before becoming even remotely profitable. I wonder if Basant still has a hard one for the Century note. Fucking stupid. Trump did say he would order interest rates to go down. That's meaningless. He can't strong arm the Fed. JPow's term expires in like 2 years. He did. He did very clearly state he wasn't going anywhere. The email they received is the exact same one Elon used at Twitter in 2022. Huh. Weird. Hmm. Seems like a good opportunity to push for the gap. There's a lot of vol shorting. Selling the fuck out of the 50s. Am I crazy to just buy a longer theta straddle and wait till we pick a direction? Probably not. That's what I did last night. They're a little bit more today because the bump in IV, but not so much that it's very significant. The fucking buy side is kind of weak. Selling a lot of puts, but no out of the money calls today. Yeah, that's not true. There's some at 75, but not very many. I don't think there's more coming in. Yeah, most of those are from yesterday. A few came in at 90, but those are just like insignificant. There's like 100 of them. Dude, NQ got fucking rejected hard. All of tech just burning today. AVGO's up. Apple, Google, Nvidia all down. Amazon down. Ooh, Microsoft took a big fucking hit. Talk more about the rounded bottom breakout that's about to shatter worlds on Fubo's chart. Fubo looks fine. It's starting to climb up. It's doing good. It's probably not going above 5 anytime soon. Are you still in both legs of the straddle from last night? Yeah. But I bought a bit of time, so. Should be pushing for the gap fill here. Mm-hmm. 62. There's really not much resistance here. Seems fine. A little bit of resistance at 65, though. Some bot puts there. Not many. Maybe a couple hundred. It's gonna fail. Yep. Oof. Failed to fill the gap. That's not good. Hmm. IWM's good old fashioned fun. Yeah. Thoughts on the GME IV and outlook. Looks like potential bottom before we increase into March. Uh, mm, yeah, I don't know if I agree with that. Hold on. IV might be bottoming out a little bit here. Um, which means that there's probably going to be some short calls closing. But we're kind of far from the monthly expiry. Mm, I don't know. I mean, Jimmy's options change. It looks like it's like very tentatively trying to hold on to 2750. And if it loses that, it's going to dump. There's no downside support below 2750 like at all. There's a little bit of delta out at like 25, but those are probably sold calls as well. It's dated for. A lot of those are like Feb, April. So yeah, I don't think the sold calls in the money are gonna pull back at all. They'll probably just sit there. Just a little bit supportive as long as it's above, but uh, some delta picking up on the chain yesterday. Hmm. Is this the demand zone? Yeah. Mm, let's see. I'm not getting a lot of momentum on these pushes, though. Maybe this is a bit stronger. You shake off anything? Yeah, all the puts at 65 and 70 are still there. I don't know what puts here. Makes sense, but it didn't actually break down. It's a nasty rejection off of you up. Still holding above 55 though. You'd think at a minimum bulls would want to get the gap closed before FOMC. Although they're really fucking struggling. Why does it keep making my fucking lines disappear? Jesus. Hmm. NQ failed. Oh, lower low. What a fucking piece of shit. Hmm. Maybe we make money until FOMC. Selling options IVs will just increase. So kind of sit on your hands. Yeah, pretty much. You can try to trade this shit, but it's not fun. We lose 47, drop down to 25, 45, 47. What's up, popcorn? Fall down? Wait, what? Chimi is not significantly illiquid. As a matter of fact, it'll probably never be significantly illiquid again. It looks okay. I mean, some short vol might pull back on it as it goes through like the ETF FTD period, which is going to be over the next like 7 days. But I don't think it's going to lead to anything substantial. Are they going to push up off of this or what? Hmm. The longer dated puts here at 50 are really fucking dragging price action down. Because almost everything 0 DTE at the 50 strike is sold puts. There's some sold calls there too, but not nearly as many. Hmm. We need to get it back above 60 to get any kind of meaningful support. I need a new windshield. I'm starting a campaign against rocks. Oh, fuck. I have to replace mine, too. It's like fucking $3,500 for a fucking windshield because of the self-driving sensor adjustment bullshit. Well, if I get an OEM one, but I don't want the shitty ones because they look weird. No, I don't have a Tesla. 1965 Chevy C10 solve that problem. They have all the sensors are in the windshield. Well, they're not. They're in the fucking rear view mirror, but they have to be recalibrated when you change the windshield. Hmm. Yeah, having a really hard time breaking out to positive delta all morning. Just keeps getting rejected. Six. Cost me $300 to replace my windshield on my 97 Chevy years ago. That's nice. My new car, 900. Yeah, it's gotten ridiculous. It's also really hard to get the part. I do actually hate that Huckleberry. I don't hate you, but I hate that that's a little bit true. My friend Bob Sacamano says MOASS is this week. He sells hats at Battery Park, and some hedgie told him he could probably fix your windshield too. Awesome. Can you take your hat off and put it closer to the camera? I mean, like this? I know you can't buy them. Not yet. Is Reddit the next meta, or is it a stinker at 200? It doesn't have, like, I think even a tenth of the number of users that Meta has, or revenues. See you then, Lawrence. Thanks. Maybe it's just brilliant shilling to sell GS to crypto bros. When we start piping in like CME data, we'll have Bitcoin futures and shit. Oh, you know what's super expensive? I used to have a Prius a long time ago, and I had a fucking pine cone fall on the back windshield, and it broke it. And that thing was expensive as fuck because it's got like that huge like curved rear windshield. It was a big fucking pine cone, like that. Ooh, and ES futures options data, ideally, yeah. 4 inches bigger. I don't know. It was very dense. Like it hadn't opened up. It was still hard, like a fucking rock. What's up, Nuke? Ooh, fuck yes. That's what I'm talking about. Oh, great. Another failed breakout. God, bulls suck today. There's not even that much resistance to the upside. They're just not even trying. Like, we finally dump negative gamma. He looks pretty weak here. What the fuck? Losing 47 should be pretty bearish. Still haven't made a new low, though. Dropped down to like 40 or 35 here. Hmm. It's a weird and unlikely support. Hmm. It's gonna get yoinked again. Getting pretty close to the positive delta test, but not quite there yet. Weird and unlikely support was part of my wedding vows. Nice. No, the positioning around spot supports this. It's just weird. Kind of weird that the bulls are only trying to keep it off of negative gamma, but not trying to pump it higher. That's like a little strange. Because there's like a little bit of out of the money bullish positioning. Like you'd think they'd be gunning for 60-60. Looks like they're de-risking. It does, yeah. Or at least their positioning is breaking down as we move lower. Could be like a little of either. Mm. Any like out of the money shit? Some like bot puts at 60-20. Otherwise, not much. No, as long as we don't get weird support at 45 again, it should break down to like 40 or 35 on a failure of 47. Or does gamma go negative? 43.33. This is probably the level to watch. Mm. Wouldn't Fubo 455? I mean, it's just its support. It's not doing anything particularly interesting. It's not even really getting any, like, significant covering. Maybe it'll get, like, a little burst of a run as we move into the ETF FTDs, especially after the big run earlier this month. I'm sure there'll be a decent number of them. So maybe in the next few days it'll get a pop. Like upside interest is decent, but support is definitely still like 350 and $4. Shockingly, no matter how often you ask me about it, the options chain doesn't change that much. Pull back up Gamma Strike. It looks like they're de-risking it. It's kind of, yeah. Yeah, I mean, the consistent like downward momentum and delta, like the delta flip level. Um, but it's starting to flatten out a bit. I mean, they're definitely trying to build support at 50, 40, somewhere in here. The higher low might be a good indication that they're going to try to push. Mm. Or this just dumps again. Not yet. you look at Elf? I need some shit coins. In a second. Hmm. Hmm. Bitch. It's Elf. Looks terrible. Mm, it's got some support at 105, but it looks like the chain looks awful. I would guess a failure of 105 would be interesting. Seems like it failed already. Low support today is at 104.60. Mm, I don't know. maybe it pushes back up to like 115. There's still quite a bit of gamma to be lost to the downside, and only like a tiny bit of support. Maybe if it got like over 110 or something, it would be worth going long on. I think Q's not selling off here. Oh, there it goes. The actual fuck. Oh. It either holds 97 100 and gets some support, or just jumps hard to find a new low. Well, I mean, it kind of held 100, and 105's supportive as well. Which it's currently over. But I wouldn't want to go long here. I wouldn't want to trade it here at all. Unless you were going to get like a straddle. That seems shitty. Continuation? Holy shit. Gotta be shitting me. This is insane. Will the Bulls run out of pump juice? It's so bad. No, they just keep trying to fucking keep the chain from falling into like negative gamma. This is the fourth fucking bounce. Huge volume on that candle. I know. It's ridiculous. All of them have been pretty big. Fucking knife catching is absurd. One second. Puts closing at all? No. They're still selling a lot of puts at 60.50. They sold some at 45, mostly on just our two bottoms here. Um, there's some sold puts at 55. 60's flat. Um, some bot puts at 65.70. Those don't appear to really be closing either. I mean, the lower this goes, the more negative Gamma's getting overall. So you'd think we'd get a fucking breakdown already. But so far, they've managed to save it every time. The fuck? This is the closest we came to actually breaking down earlier. But they don't have any positioning to the upside, so we just keep failing. We can get above 50 where the sold puts are, but then there's just nothing. Uh, Maybe NQ will sell off here a little bit. Looks like it's going for a new lower low. There we go. $21,480. Mhm. What's your favorite kind of cookie? Like manufactured cookie or like home cookie? How does IV and theta decay typically impact zero GT option pricing on FOMC days? I asked this earlier, but I just step away if you already answered. It affects it the same way that it affects it on non-FOMC days. IV usually crushes after starts to crush after the meeting, but it doesn't crush that much usually. Generally because realized vol picks up after the meeting. Or like after the presser. But there isn't like a specific dynamic of it that is particular to FOMC days. No problem. You a snickerdoodle type of guy? Ugh, gross. Chocolate chip walnut. If I'm maybe some maybe check a little I don't know, toffee in there or something. Actual fuck. Hmm. I feel like by the time we get to 60-40, it's just going to be fucking support. There's no dot plot revision today. I looked at the chart and I realized, and then now I'm just angry I woke up. That's valid, actually. Which of the Thundercats do you most identify with sexually? I don't know their names. Do you mostly trade indexes? Yeah. Intraday, yeah. Equities usually swing trades. I'm gonna just straddle QQQ overnight with earnings after hours. Advantageous to do after J-Pow presser or before rate decision? We could do it following the rate decision, although I don't think it's going to make much of a difference for event vol because we still have GDP tomorrow and we have we have GDP tomorrow. We have more tech earnings tomorrow too, and then also what's on Friday? PC. Holy shit! It broke up. Hmm. Jesus fucking Christ! Fuck that. Panel says a tier auction Thursday night. Yeah, I know. Yeah, still boring. Do you only trade a few sectors, or do you have a screener or something? I trade all kinds of different shit. I have an entire options data program that I built. Well, participated in the building of. Technically, Nuke built it, and Dork, and some other people. Why are you sad facing? Dude, that's nice. It's very zoomed out. I think Nuke went blind from boredom. It's fucking pretty reasonable. None of this is very exciting. I can't believe I made $10. Congratulations, man. I don't want to go long here. I don't fucking trust it. Buy a $15 at the money options contract and then watch it get sold down to $13. If you want to spice it up, let's talk about raw milk. I've had enough of that fucking discussion for one day. Popcorn, I told you I don't know the names of the Thundercats to tell you which one I most sexually identify with. Also, win GS beta access. The link's in your email. Finally, I could hear your voice. You couldn't hear it before? When can I get that cyan hat from yesterday? It's my favorite color. We'll see. There's like 6 of you guys that have like print shops, right? I might need to do something better with the with the logo. Hmm. Delta flips positive at 51. Ooh, spicy candle. Some bigger moves on vol there. Hmm. Gotta be shitting me. Holy shit, is Gamma gonna go negative? Or do I just need to buy the fuck out of this dub? That was the answer. Can you make the hats reversible with VWAP on the inside? No. Maybe if it was like a beanie or something, that could be accomplished. My dead CPA messed up my returns from 2023, and I owe the IRS an additional 200K. Do you think I could just wait until Trump abolishes? He already fired all the IRS agents. I don't know. Ask your alive CPA. File for an extension. See what happens. How do I yell at a dead man? Piss on his grave. I'm assuming poor people will not have access to the beta live charts. If so, does Gamma Strike have some sort of sunblock lotion that will prevent us from catching anything from them? I mean, people will just have access to whatever level they pay for. Ooh. Actual negative gamma? It's happened. We've finally broken through the line. Just in time for us to run into support. Jesus, they've sold so many fucking puts. Why do we keep going down? Uh, Gap at 46. Oh shit. Need to close my straddle. There we go. That's a decent bounce. Let's keep doing that. Was Delta flip positive? 50? Like $3 more upside, maybe. Mm, bounce failed. All right. Glorp. This shop has been amazing. I've made tens of dollars. Nice. Mm. Where's the gamma flip now? 60-42. We slipped it a little and then bounced really hard. Inverse head and shoulders. Mm. The expression "gotta be shitting me" is derived from the Greek as gamma, not gamma gamma. Also, sorry I bought a call. Don't worry, I'll buy a put to reverse the downs. Win calf reveal. Thank you, Joshy. My calves are already available on the Discord for everyone, even the pores. And only AJ holds the power to reverse the market by buying a position. God, this fucking sucks. Mm-hmm. 60-50. Fail. Hmm. Support at 40? Yeah, a little bit. Not even really that supportive, to be honest. There's just not a lot of positioning at 40. 60-25. Hmm. Ooh, push the bounce. Surprised vol isn't going up more. Push a lot of the fucking soul puts on the money here. Just drop to 25, you piece of shit. Then recover. Oh. We're on 6,000. But we're not going to 6,000 until... definitely not going to 6,000 until later. Not really selling the 40 put very much. A little bit at 45. A little bit at 35. Seem to be avoiding the at the money one. There's a couple puts sold there, but not many. This scam call yesterday, they had me going pretty well until they wanted me to buy a bond at the US Treasury kiosk. That ended up being a Bitcoin kiosk. Wait, you made it all the way to the kiosk? Well, dashboard versus live data. Colors of gamma, delta, flip, GN, DN is kind of backwards, don't you think? Well, you don't have DN and GN on live data. But I think they're still the same as the yeah, they're the same as the delta neutral and gamma neutral colors. trading between Delta and Gamma Flip has been on point today. Well, we might actually have enough momentum to break up to positive Delta here for the first time ever. If someone doesn't come in and curb stomp it again. Or at least the most momentum since this morning's bounce. Also, NQ's actually moving a little bit. Nope, never mind. Curb stomped. 6040 is stronger than DeepSeek. We're going to 6100. I'm not even sure that's likely if the Feds does something bullish. It's not a lot of interest above like 60. There's no delta above 60-60 like at all. I'm sure some's coming in on the intraday here, but it's pretty shitty. This is the test. Delta positive or no? Ooh. A little bit of a breakout. Hmm. 8250. You're gonna get the push out to 60. Uh, Hmm. Fed stuck. Have you talked FOMC? Yeah, at the beginning of the week. I don't have anything new to say about it. I don't think. How's it feel knowing you're building out a data service while the people who banned you on SS are just building up crusty socks under the bed? I haven't thought about that, but I like to think about that. Not the crusty socks. Those people were just objectively morons. So, I mean, it's never have a battle of the wits with the ignorant or stupid. It will beat you with experience. Something. I don't remember. Mark Twain. Walter White. FOMC is going to not do a rate cut and say only two this year and then say they are not a federal agency. Slight downs. AI news tomorrow pushes NQ down more. What AI news is tomorrow? Why have we just run into a brick wall of resistance here? Like, what the fuck? There's 2,000 sold puts at 50 and like 200 sold calls. Just test VWAP at least. Jesus fucking Christ. Does nobody want a better exit? It's not even like sold calls are piling in on this move. There aren't though. The only like sold calls anywhere near spot are up at like 60, 70. I'm gonna have to look out further. Maybe just everything being traded is just further dated right now. Because the zero DTE chain's not fucking moving at all. Let me look at Friday. Sold calls at 60, 50, but bought calls at 55. Like a decent number of them. Synthetic long at 55. And then bought puts at 60. So yeah, I mean, we should be able to push up and test 60. Like, that shouldn't be too hard. What came in today? Mostly sold calls and puts at 50. Yeah, it's just like a little too much resistance. It doesn't make a ton of sense. I know there's some future sellers, but someone's also aggressively buying the dip on futures, which we've seen on almost every like downside test of that trend today. I still don't see anything that would keep us off of 55 or 60. I guess I could look out into like OPEX, but that would have to be a lot of fucking delta. Mm, Give me 1 second. Sorry. I had to make a phone call real quick. Oh, this is so fucking dull. So for pop back up a little. Breakout. Mm. Delta's like a little bit positive here. Still haven't gotten back over 53. Although it's looking a bit better. Should we break it? No. So 53.32, then 55.48 to confirm. That's nice. Okay, there's 53. $55.48. Heard 6,000 later today, but not right now. I'm just gonna get a shitload of profit taking after a $10 move. I think the answer might be yes. Will Disney affect earnings affect Fubo now? Probably a little bit, especially this quarter and next quarter. Do you have an expectation for FOMC? I mean, I think the Fed's most likely to pause, but who knows what they'll actually do. I mean, obviously there's political pressure now for them to cut rates further. The Fed almost always will make the stupidest decision possible. So, I mean, they're probably not going to hike rates, which is what they should do preemptively. So, pause is most likely. It's not bullish. It means higher rates for longer, which, I mean, the market's largely priced in, but It's definitely not good for, like, a pause isn't good for mid caps. It'll be bad for breath. But if the Fed's worried about inflation, it could be bullish for tech momentarily. Dovish hike. No, that would actually be um that would actually breathe a little bit of life back into the Fed if they did. Otherwise, no one's gonna buy their shit, right? No one wants to buy our garbage debt. Our monetary policy has been wildly mishandled, and our fiscal fucking situation is atrocious. Hmm. This isn't super bullish. It's a fucking ugly breakout. Bearish consolidation. So we failed to get above 55. See if this pulls back. Loss of 50 is going to see delta dump or gamma dump to the downside. Gaps filled. NQ looks pretty weak too. Tasty's pretty good. If I didn't use WeBull on stream, I'd probably use Tasty. The backtesting stuff's nice. Fills are okay, and managing trades is not quite as intuitive, but they're pretty good. Use TradeStation for your IBKR accounts. Yeah. Except futures. I use Quant Tower. Although sometimes I miss Sierra charts. How the fuck is Reddit at 201.33? Regarded? Don't they have earnings coming up? Probably just vol pushing and squeezing out the short calls. Hmm. It did not fail as much as you would have expected it to. I guess we held above 50. Is that bullish? Not really. It's still a lower high. You gap down. Bulls are really struggling with a 50 strike. Seems to be a big problem. There's got to be something there that I'm not seeing out into next OPEX. I mean, there's a lot of sold calls, but they shouldn't have this much effect. Or it's just future sellers don't want to buy this shit over like 60.85. Or futures buyers or profit taking or buyers. Try using TWS with the software. I can't even draw a chart. I've never used the. I don't think I've ever used TWS. TradeStation was like the standard way back. Be careful using Tasty Trade Backtester for anything 0 DTE. It tracks to the 10-minute tick, which is too volatile for 0 DTEs. Option Mega is much better for options backtesting, but it's $100 a month. Fuck that. Easier just to manually backtest shit at that point. Setup looks so bullish short term that we just keep rejecting. Yeah, no. Well, I mean, this is a head and shoulders. This is not bullish at all. It started to be, and then we got like that really nasty bearish consolidation into the breakout and then failed. Not that we can't still get support here. I mean, 50 should be supportive. It's not super supportive here, but a little bit. But there's like pretty persistent sell pressure. I'm assuming that it's just breadth is underperforming, but actually it's not. Dow and Russell are flat, so can't really blame them. Dixie's flat. Yields really aren't doing anything. There's a little bit of risk on in Bitcoin, but yeah, like gold's flat. Oil's down a little, which should be kind of bullish. I mean, at least pull down on volatility a bit. This is like CTA shit. I think the CTAs are in a weird spot here. They went net long on that breakout, and then we dropped fucking 300 points overnight, which has got to leave them in a weird spot as far as like netting out their profits. They were already like extremely overweight long on ES. And so, I mean, a lot of this might just be them trying to get out of their positions since everything's so heavily futures driven. Yeah, I mean, the massive gap down definitely fucked them. Because like at our high, we like barely brushed like their upside trigger, which means some of them went long or longer, but then overnight risk is up, but they've still got those positions. We do have positive delta here, so it's going to be a little harder to fail. Not much, but a little. I think delta flips back negative at 60.49, so we almost brushed it right there. 60.49.91. So we just kind of tested it right there on that bounce, but that failed. So we'll probably get another test of it, and then we'll see what happens. But if we fall back to negative delta, we'll probably drop back to the fucking gamma flip again, which is like 41 right now. I will say NQ is looking incrementally better. What's going on with correlation? Yeah, correlation's coming down pretty sharply. So this may develop into something more bullish like over the next hour, but not right now, I don't think. Accessing 0 GT is going to be pretty worthless regardless. TOS used to be amazing before Schwab bought them, and now it gets worse every day. I was like excited initially, and then I remembered Schwab ruins everything because I refuse to use TDA as a brokerage. But when I already had a Schwab account, so when they bought them out, I was pretty stoked because everyone was always raved about how Thinkorswim was like the best trading platform. But yeah, it's gone to shit like everything else Schwab touches. There's too many variables on 0DT. Yeah. There's certain things that you can backtest on the 0DT, but more on the option selling side. Automated drift rebalance. Fuck that. I remember like back in 2021, Fidelity got a real hard on for getting me like hooked up with one of their FAs. They started calling me and shit. Like, hey, we noticed that you have a lot of concentration in one stock. Have you ever thought about allocating your capital more efficiently? Are you a fan of VST? Why does that keep getting brought up? Do I need to feed you guys more equities so I don't have to listen to shitty Wall Street Bets picks every day? Fucking stocks up like 100% in 6 months, and you want to go long? Or are you trying to short it? I'm definitely buying it now. VST is Pelosi, I think. Is she long? Aren't they like a fucking utility company? Didn't we just find out you can fucking train AI with like a pork chop and a Raspberry Pi? A whole Raspberry Pi or a whole pork chop? Both. You need one of each. Gamma flips at 60.42 now. And we're negative delta. I wonder if we get a bigger failure now that we had such a hard push back to the upside. Because if we have to deal with this shit again, I'm gonna fucking go back to bed. It's actually kind of a fat gap. That was like right at the top of the shoulder. Nasty. Fucking illiquid, nasty future sellers just blowing shit up. If we lose 45, we have a bit of a cleaner path down to 25 this time. Pick 17, let's go. Squeeze out all the short puts that were sold to push us up. Hmm. Get fucked, Gork. Stocks only go sideways. Hmm. You sure? Nice, fresh. Does it look like a good long or short through the crystal ball of GS? Right now, the chain's really bearish. It hasn't lost any like significant levels yet. Not really. Like 40 and shit was pretty bad, but it lost gamma neutral the day before yesterday, but regained it yesterday. I think today it's like right at GN, right? But that's kind of normal on like, yeah, it's just above GN. GN's at 122.83. Unlike mega caps, when they slip, they usually bounce back when they fall under gamma neutral. But if Nvidia loses like 125, it's pretty fucked. If it loses 100, it's very fucked. It's been a while since it's been that low. I think the last time was when like August, when everyone got freaked out. It went like just briefly went under 100. But that's kind of where the next support is like 101, and then below that 90, like on the longer term time frame. But and the fucking like the chart doesn't look good at all. Like it distributed it out, and then they tried to recover it. It failed. They tried to recover again and failed. So even on like the technical side, it looks like it's getting set up pretty well for a downside move. And that aligns with like probably the profitability fall off that we're going to see in their earnings over the next year. And the issues that they're going to have with, Taiwanese tariffs and, more efficient AI build out. If Nvidia hits 90, I'm going to throw the house at it. AI, AI, AI. That would have worked out well for you last time. The second time, maybe not so much. If Nvidia hits 90, I'm going to close another half of my puts. If you were China, devaluing the one thing we need Taiwan for would be a pretty interesting move. I mean, I think it's just that DeepSeek got spun up in the news cycle and it freaked everyone out. But I mean, the knowledge of more efficient models has been out there for a while. I'm still here. It didn't work out that well. Fair enough. Apparently AI does not use that much energy once everyone learns it's just an R&D chatbot. Yeah, shocker. Wait till Huawei releases their next gen chips. That's when Nvidia really tanks. They don't have the like 2 and 3 nanometer processes that they need. Also, making those chips at scale, even if they can make them, making them at scale is immensely difficult. Nvidia still has, the gaming industry as an outlet for all its binned chips that they can't use. And China. 10-year 3-month looking wild. Why no Bigley crash yet? I don't think anyone's out yet. I mean, maybe a little. Obviously, leverage has declined a lot over the last month, but there's still a lot of exposure. Everyone's going, like, you're expecting everyone to go from, like, overweight max long to selling off everything quickly. It's probably going to be a really slow process, at least initially, and then all at once. Oh. So just fell under negative gamma here. A little bit of support at 40 still. Not a ton. And if we lose 38, we start to fall. Like, 40's GN, I think, right now. Yeah, 40's GN on the monthly. So if we lose 40, things are probably going to get pretty bearish. I don't know if we have enough momentum here to lose it, or if we're just going to bounce off gamma neutral here again. But GN on the monthly is at 40. GN on the weekly contracts is at 34. So I'd say if both of those fail, that's going to be pretty fucking bad. We'll see how far this bounce carries us. If they get it back above 45, they'll probably push it up to 50 again. If we can't regain 42, maybe we grind down a little lower. A pretty decent rejection off of 42 there. But no lower, we need a lower low. Still not a low for the intraday either. 89.25 or 69.25. Ascend 910C is being released this year by Huawei. Should rival the H100s. We'll see. I somehow doubt it. GPU, like almost every other manufacturer is like 1 to 2 years behind NVIDIA as far as GPU tech goes, and most of them are abandoning their GPU like fabs because they don't want to, like it's too cost intensive and they're not making enough money off of it. I kind of highly doubt Huawei's even close. Ooh-wee. Oh, there goes gamma neutral. Hmm. So we get the 25 test. Okay, what the fuck did Trump do? Trump officials discuss tightening curbs on NVIDIA China sales. Ooh, nice. Alright, well, I guess it's just fucking boop. There. Let's go. Ah, I missed this part about Trump being president. I'm not gonna lie. The rest of it I could do without. But the sporadic intraday announcements of market shifting news, definitely my favorite. I think support might get blown up on SPX here if things continue to sell off. So there was support at 25, but now the 25s are in the money, which is not good. Mm. Resistance. Hmm. Reverse the whole fucking drop. The fuck? Hmm. Is it time to short NVIDIA? I think it's more confusing that there was a bounce there. What the fuck did we even bounce off of? Hmm. Hmm. The White House rescinded the federal aid freeze. White House rescinded federal freeze on grants. DeepSeek may have improperly harvested his data. I have to go into FOMC at 60-50. 60-40 to 60-50 was probably the preferred target. We didn't get back. I mean, we're testing GN on the weekly, and so far we're not back above it. Hmm. reversal. Hmm. You're probably gonna pull the old hawkish pause, probably. Hmm. Dion test. Ridiculous reversal. News didn't change, just piling money into other shit. Like Apple. The video was dangerously close to 120. Yeah, I know. How do you get out of the could have made X mindset, even if you made some money? Just, I mean, it's irrelevant. You weren't positioned for it, so you couldn't have made it. It's just like a what if scenario. I'm actually gonna reverse this fucking shit. That's insane. We have 30 minutes until FOMC. God, quick, put all the money in Apple. Gamma's positive here. $21.5 test. What a fucking crazy reversal. Hawkish pause, bullish. It's what it's expected, but it's not bullish. If you want to know the direction the market's going to take, based on what Powell picks, just wait till 201 and you'll know. You're not going to know in advance because you don't A, know what the fuck he's going to do, and B, you don't know how anyone's going to react to it. Flip a coin and pick puts or calls. What in the actual fuck? Didn't quite get to positive delta. $2 off. Rejected pretty hard. Mm-hmm. They changed the fucking margin requirements? Oh. Margin racks are up for FOMC. Lame. I could transfer money over. Nah. To what, 3 o'clock? You see positioning around 35. Bot calls sold puts upside, but puts sold calls downside. Yeah, it's just sold puts everywhere. The games began. Oh, you mean like the fucking 45.50 and the 2015? Yeah, just they close out the top or the bottom side of their neutral positioning and then just let it dump into the other side. Decision at 2. Yeah, I know the decision's at 2. 12 minutes. Jesus Christ. Hmm. Yeah, it's dumping now. GN on the monthly is at 34. If we lose that, probably back to like 25. 25, 30. I feel like we're just gonna stabilize here for a bit. $60, $50 calls. The wise Pickle once said, the market can stay irrational longer than you can stay solvent. Everything's super expensive, calls and puts. Well, 6,000 puts like $6.50 right now. They're just not worth playing. It's pretty simple. Did the Fed cut? The Fed hasn't made a decision yet. I can stay, well, I can stay solvent for a while. Wasn't Trump? Really? The Trump news came out at 1301. Ow, haha. Mississippi lawmakers masturbation ban. Yeah, but you didn't, so why does it matter? It's not worth talking about. Oh, they are backwards. What happens in the video 120? It's like its last major support. I mean, it's already below GN, which is pretty bad, but 120 is the last major support on it. The fucking options went up from like $1.50 yesterday to like back to like 2.10 today. Jesus. Hope it keeps dumping. How much do I make if it gets to 100? Ooh, nice. Can we play the JPass song only after he's spoken? Uh, see you on the yacht with our $60 put gains. I've only made like 50 grand on them. It's not that. It's not yacht money. And if Nvidia drops to 100, I'll make another 160. Well, I'll make like 160 total. Now, if Nvidia drops to like 60, that's another story. Or 40. I just want Nvidia to give back everything from like the beginning of 2023. So if it could just drop back to like $20.55, that'd be perfect. And then my puts would make 2 million. I was thinking about picking up some like out of the money debit spreads on Tesla for earnings. I might still. If Nvidia 20, where does that put the market? Um, back to like 4,900. If Nvidia drops to 60, you could probably pick up a yacht for cheap. I only make like half a mil at 60. I don't want some fucking cheap yacht. Nvidia's probably not going to 60. I'll probably sell them long before then. I already sold half of them. What the fuck would I do with a fishing boat? Could you not use the words only and half a mil in succession, please? And thanks. Ugh. Only half a billion? Minus 50 cents? This is fucking boring again. Is Trump gonna say more shit? White House press secretary. This is not a rescission of the federal funding freeze. It's simply a rescission of the OMB memo. Secretary nominee Lutnick declines to commit to honoring signed CHIPS contracts. Secretary Basant and Japan's Foreign Minister Kaito discuss importance of U.S.-Japan collaboration. Kato. Oh, NVIDIA immediately announced, we're ready to work with the U.S. administration as we pursue our own approach to AI. The fine line between super yacht and little middle aisle inflatable boat. Yeah. I'm gonna build a resin house with pennies stacked in the walls. Why would you do that? Why do anything that we do? Alright, fair enough. Wants to build a DeepSeek AI turret. I can't think of a better use. I want the GS chatbot to be called Deep Dork. That's actually awesome. I will not sell my upside hedge prematurely. I will not sell my upside hedge prematurely. I don't know if you need to insulate a fucking resin house. Mm, hmm. Do you think about all the excitement we're gonna get for the day? I feel like that was more exciting than the actual Fed decision's gonna be. But we're still caught between like quite a bit of bearish and quite a bit of bullish positioning. So, I mean, once we start to move from the Fed decision, we can move quite a bit from here. I would say like 6,000 and 6080 would both be like potential targets. A little bit of a head and shoulders going on there. Unless they cut, yeah. But that's not the expectation. There could be a short-term bullish outcome. But I mean, higher for longer is bad for anything that's pretty much not tech. And then that's not going to make the bond market feel great about inflation. And if they actually cut, the bond market's probably going to push back again. We're going to get more of the bear steepener. Dot plot saying no more cuts. No, the dot plot didn't say no more cuts. It said 2 cuts for 2025. We've priced out about one of them. If we don't cut here, we're probably going to price out the other one. But it'll depend on how hawkish she is. Probably not fully. If they were to actually cut, I think it'd be bearish as fuck. Like, initially we make it a pump, but yields are going to rocket if they do that. Cut the most bearish outcome. I mean, unless they hike. The black hat is way better than the blue one. They're both awesome, alright? Did you get him, Nuke? Look at I like seeing you exercise your moderator powers. I read an article about Trump, please no politics, potentially imposing some tariffs coming out of Taiwan as well. Yep. Have companies already started scrambling to get around these tariffs? How? did you guys hear Trump going on about how great the period from like 1880 to 1920 was? Literally the Gilded Age, where like three people had all the money. I was definitely still alive. Yeah, I didn't mention 1929. Of course not. Oh, decision. Market doesn't like it. That statement does not include language that inflation has made progress towards the 2% objective, as it had in the December statement. Risks to achieving employment and inflation goals are roughly in balance. Does not include yeah. The statement does not include any language talking about the progress towards 2% inflation. Unemployment rate is stabilized at a low level. Labor market conditions remain solid. Replacing reference in the previous statement to conditions have eased. Economic activity has continued to expand at a solid pace. Vote in favor of a hold was unanimous. They're attentive to both sides of risk in their dual mandate. Exciting. What doing yields? Ah, yes. Excellent. But dollar up, so that's nice. Do they actually still have a dual mandate? I'm pretty sure their actual dual mandate is just do as little as feasibly possible and hope we get away with nobody noticing it. Well, now what? Now we wait for the presser as everyone tries to mean revert the price action that occurred right after the drop. I'm gonna grab some food. I'll be back for the fucking presser. Ooh, no mean reversion? Interesting. No mean reversion yet. I feel like selling back off to the low of the day is not a great look. The video's down another 1%. Man, if Apple announces like another 20 billion in share buybacks, they're gonna get like half a trillion in market cap. Mr. T, thank you so much. J Powell likes pineapple on his pizza? Probably. Pickleball? I'm not starting a pickleball team. Never stop and think. Is that a statement or a question? Just got out of work. Why is my port green? You probably had puts. Kirk's eating snacks. Yep. We got like 6 minutes till the presser. I can't wait to infiltrate the fucking Federal Reserve press corps. All I have to do is give the Trump administration my name. And link that to my social media profiles. The best thing that JPOW could do would be to say hikes are on the table, whether they are or not. He doesn't even need to say they're on the table. He just needs to hint that increase in policy could be something that they might do in the future. No one has time for that popcorn. You think J-Pow goes back to a red tie now that the Republicans are in office? He's gonna come out in a fish t-shirt and say, fuck it. I make a prop bet somewhere that Trump will have J-Pow tackled off stage within the next 6 months. I could see there being a lot of like contention there. No, not tension. I think it'll be loud. You know, it's weird because Trump put him there in the first place. When it fucking starts, I will. Oh. It's fucking go time. Little elephant foot. Damn, still purple tie.
Good afternoon. My colleagues and I remain squarely.
Did you guys see him pulling his pants up?
Mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance.
Reduces security holdings. Isn't that what happened when they called the top in 2022? He's talking about the Feds, not his personal ones.
Over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal.
Which is
estimates based on the Consumer Price Index and other
been
data
ongoing.
indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and
Jay Fresh, you know perfectly well he means rolling off
markets.
More than they
Monetary
buy.
Policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance.
You talking about the fake QT?
And we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data,
the Fed's a business.
evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides.
No, it's not. You drove it below the neutral rate, you moron.
As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will
I wonder if all the media people have been replaced.
A wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus.
The New York Times cutie quit.
The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
How do you guys know these
Thank you.
people's
I look forward
names?
to your questions.
Steve.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a three-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
Three questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
Thank you.
Thanks.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive. And for that reason, we're going to be focusing on seeing real progress on inflation or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated.
That was actually a good question.
To balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings and you see we don't overreact to two.
I don't think he's in the pickle jar. I've talked to him on Twitter before.
The last couple of readings have suggested more positive readings. So I think policy is well positioned.
Colby from the New York Times.
Well, look at him get right out of that trap.
Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No, so let me look.
Colby Smith is still there, Jay Fresh.
A little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market, and we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, which
Why
where
the
it really
fuck do
matters.
you
And those could be
guys know
related
all
to-
these
could be
fucking
related to what
reporters'
you mentioned,
names?
Some of the new policies.
What is wrong with you?
I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, and actually are not really beginning to see much.
None of them have
And I think
OnlyFans.
we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be.
You don't know
until we see how it
Guillermo?
plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or
Nick
if that's not true, can you lay
Tamaros
out what
from the New York
you think
Times,
is going to happen in the
100% has a
economy, how you see it
OnlyFans.
Well, at all times, forecasts are conditional at a minimum on.
I know what
just
you're trying to make me
a
Google
set
it. I'm
of
not going to do it.
expectations. And they're highly
Also, he's from the
uncertain
Wall
in
Street
both
Journal.
directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty.
Because like 3 minutes
What
ago, he said
forecasters
Nick
are doing, not
Tamaros,
just
Wall Street
us,
Journal.
What everybody's doing is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know. And so you're just on hold waiting to see what comes down. It's a very large economy, and policies affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
We're looking, it's more the way it works is we are looking at the data to guide us.
Say
in what
rate
we should
hike.
do. And, that's what we do.
Drop
And,
it in there somewhere.
Right now, we feel like we're in a very good place. Policy's well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And, as I mentioned, as we see that, or if we were to see weakening
he's
of the
avoiding
market, that could
exploring the
foster-
hypothetical
we could then be
so
in a
well.
position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard.
What's
Howard Schneider with
600
Reuters.
Hey,
Thank you very much.
hit the fucking like
in
button,
2021 at a
assholes.
central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and
I'm not
persistent
angry. I'm
commitment
just
to diversity
disappointed.
and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
Is this a dovish
So
pause?
let me
Hold
say,
on, there's still time for
yes,
him to
in answer
fuck
your
up.
First question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth.
Now he's pissed. Now he's going to say something bad.
Follow up on Steve's question. What reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
None.
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, you know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So mad, maulding.
One of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and you know, it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see there are alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, you know, the policymakers to sort of think and understand about the you know, the uncertainties that surround this. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad. And
It's purple.
not
It's purple.
just
It's the
now,
same
but
fucking
always.
tie he wears
And
every
we have to-
time.
It's hard to be open to just how broad the possibilities are for an economy. You know, no one saw the pandemic coming, and it was, you know, it changed everything. So things happen, and but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case, but you don't act until you see much more than we see now.
Katerina.
Yes, you said do.
Katerina Saraiva, Bloomberg News. You know, last month you talked about a future rate cut as being pretty, you know, significantly.
They've replaced everyone.
Predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. You know, we want to see, you know, further progress on inflation. And, you know, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, you know, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and you know, housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, that then we seem to be set up for further progress. But being seen to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, you know, we're under 2%.
Ready for what?
Our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you know, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good, but if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, "absurdly overstaffed." We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very.
These meetings are going to get so fucking political.
We owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say, so I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, "mobilize mainstream finance to support the transition toward a sustainable economy." So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. It just the process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. You know, we're somewhat above that, as you know, and you know we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course, as I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the trade, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There's a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2000 and I guess 18. We didn't really know. And, again, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney.
Thank you. Courtney Brown from Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI-prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So, let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon.
Simon Urbanovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think I think these higher rates are going to they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
You know, I want to avoid commenting even indirectly on the
The
conduct
stock market
of
getting 13
tariffs.
trillion
You know,
in
it's not
value in
our
10
job,
months?
it's not our job to
Isn't a
comment
macro
on
condition?
the moves that
No,
people
it's
make.
silly.
So I wouldn't want to criticize
It's just
anything that's
shuffling
happening or really
around.
comment on it one way or another, praise it for that matter. It's just not our job. I do think that, you know, we found in 2018, there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things
I
like
should
that.
add that to my
That's not
notes.
something
Pickle
I'm
jar
observing
into
today.
women
It's very
with too
early
much
days
lip
for this,
filler.
but that did, I think that did matter in 2018-19, and it's one, you know, one of many things we'll be watching.
Should I call that duck face?
Matt.
Duck face.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are
Pickle
you,
jar into women who have a
all,
pulse?
about potential
Yeah.
asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look at, from a financial stability perspective at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look
You getting
at that.
into munting I-win losses?
We look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents
Those are also
a
fucked.
tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Richard.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge
This
your
guy just
assessment.
looks like a fat and unshaved version of the prior
The
guy.
things we discussed earlier. One is that there's a low hiring rate, and so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at.
Same baby farm?
I think it's
Ah,
also,
makes sense.
it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs, and really it's high
No.
inflation for the basics of life.
Single mothers
It's not
all
so
over
much
the country
inflation
can
now,
totally
it's the
afford
price level,
$12
because
eggs
inflation
and
has raised
$15
prices.
orange juice.
Inflation is
It's
now
ridiculous.
much closer to target.
You got
but people
wages
are really
up,
feeling
remember?
that. But overall,
Guy forgets his own
this
accomplishments.
is a good labor market. You're at 4.1% unemployment.
Thriving, exactly.
That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there.
Here's your generic Pop-Tart
given,
kids.
there'll be much slower population growth.
One more question.
Fucking
Given the
insane.
uncertainty around
Fuck
immigration
eggs.
policy,
I'm going raw milk only.
In your assessment, is
You
that
gonna get
making
your
it
own
harder
cow?
for businesses and the Fed to plan going forward?
We hear anecdotal
Nuke's
reports,
not gonna drink
but
raw
I don't
milk.
see, there's nothing in the data yet on that, but you hear
There's
that
seed
kind of thing
oils
about
in the cow
construction,
feed.
for example, and businesses that are
So we're okay.
on immigrant labor are saying that it's suddenly gotten harder to get people. But again, I don't see that in the aggregate data yet, but yes, you hear it anecdotally.
Nick.
Thank you, Chair Powell.
I can spare about 5 milliliters of raw milk a day. You know, Dave, isn't that the amount of ejaculate in an average emission?
Career, or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
It's Todd.
Uncertainty is with us all the time. It is human nature.
Wait,
apparently,
was the guy's
to
name actually
underestimate.
fucking Todd? I don't care what J
Certainly
Powell's
a
saying.
theme today.
Oh, his name's Nicholas.
You know, the possibility,
Todd.
you think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, you know, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? You know, that was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut? Or are you looking for inflation data that roughly aligns with current forecasts?
So as I mentioned, the economy's strong, the labor market's solid, downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts?
You know, it's one of those things, we'll know it when we see it, but more the expectation is that we will make continued
I like how
progress.
he's leaning into the "we don't have a fucking clue" narrative.
You know, that's what we want. We'll know it when we see it. It's going
Very
to have
professional,
to be something
very
that isn't
demure.
just idiosyncratic. You're going to want to see, continued progress. With
Don't say that
services
fucking word.
inflation. You're going to want to see inflation behaving in a way that builds confidence that we
You
are
piece of
really
shit.
making progress. That's what it's going to be. And I mean,
Now
is
Super
that
Stonk's
better than
gonna
our
think there's a
expectations?
hidden
We expect
fucking
to see
message
that.
in the
It's just a
Fed
question of
speech.
when.
Nope, here it goes.
Hi, Chair Powell. Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it, if I'm being at all unclear. We're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, we said, what we said was that, at times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Let's go to Mark for the last question.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
So our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and soundness. A good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So.
And with respect to households and their inclusion in that asset class?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do. Thank you.
Yes, other engagements. What are we doing? Is it true if you don't use it, you lose it? Yes, absolutely. Risk on? Is crypto pumping? Yield's kind of moderated by the end of that. Dollar's still flat. Yes, and NQ still down on the day. Yeah. Doesn't look like things are changing very much. This move puts Delta back to positive for the intraday. See if bulls are able to push up from here. It's gonna be some bot calls at 50, and then sold calls pretty much all the way to the upside from there. So maybe a little resistance at 55, but I could see us pushing as high as 70 if this doesn't get rugged. Several of these have gotten just rugged today, so. NQ seems to be doing pretty well. You have a Spotify with pickle jar songs? I have, yeah, it's in the, fuck. It's in the announcements channel somewhere. There's also the music channel in the Discord, which has all the, like, user-made pickle jar songs. Good lord, strangles are expensive. We have earnings tonight. Big fat tech earnings. You'd think they'd want to pump the fuck out of this before then. It's much better to be disappointed from a local high. Pi-Fi is the Spotify channel name. Yeah. Can we play the J-Pow song? Oh yeah, absolutely. Let's be depressed for the rest of the day. Oop, I gotta move my stop up. Ooh. Failure. Go a little higher so I can close my calls. Come on. I just needed to, like, test 60-60. And I can get the fuck out of these things. It's not even a big ask. Is Sono down now? Like it doesn't exist anymore because they got sued by everybody? Oh, okay, weird. I think we're going higher than 60. You always do, NW. You always do. Yeah, MSL net system sales down, net service contracts up, net income down year over year. Bullish, right? Yeah, I mean, because what you don't understand is they're gonna make so much money at some point. Totally. I think Sono's down. You kept your calls through all of this? I have like 23 data expiry straddle. So yeah, the swings were that wild. I closed the puts though, so now I want to get out of the calls and reposition. Surely ice up in Central California and 75% of farm workers not showing up to work won't have any effect on food prices. Well, if you guys leave the union, then it'll only affect your food prices. I'm convinced. Going long as fuck. Now you're learning. Okay, yeah, so Sono's dead. No more AI songs. That was fun while it lasted.
In a town where trains pass slowly, I sip my coffee dark and strong. Prices rising with the sunrise. Each day's harder, feels so wrong. Jerome Powell, you're no hero, not the man we thought you'd be. You're just a shadow of Volcker, Arthur Burns in our memory. I see the shuttered storefronts, places my granddaddy built. Folks are pinching pennies, dreams erode under the silt. You promised us salvation,
Really?
but your silence digs our grave. Jerome Powell, where's the justice? Our homes we couldn't save. Jerome Powell, it's the path you chose to take. We're aching from inflation while you gamble on our fates. You'll never be a Volcker, your legacy will fade. Jerome Powell, we're all stuck in the mess you made. Families gather around the table, stretching meals that are too small. Mama's crying in the kitchen, hearing every child's call. You could have changed the story, eased the burden and the strain. Jerome Powell, we're all stuck in the mess you made. I remember when it all started, promises of skies so blue. Now we're walking in the shadows, wondering what you're gonna do. Every speech you mumble just leaves us in despair. Jerome Powell, we are waiting, but it seems you don't care. The echoes of your silence scream louder than your words. We're drowning in this struggle while your hope flies like the birds. You could have been our savior, but now we wear the chains. Jerome Powell, just a cautionary tale of a leader who refrains. Echoes of your silence scream louder than your words. We're drowning in this struggle while your hope flies like the birds. You could have been our savior, but now we wear the chains. Jerome Powell, just a cautionary tale of a leader who refrains.
Someone put their pickle in my jar in spirit of earnings. Can you take a look at $BLX? Earnings next week looks pretty bullish 3.
I don't like playing earnings itself, but yeah, I mean, it looks like it's moving up into earnings. Seems analyst estimates are maybe a little lower than projections. See, what I hate about Roblox is they don't actually make money. because of their insanely high operating expenses. Net income. Not really trending up. How are cash flows? Cash flows have been moving more positive. Yeah, let me take a look at the options chain on it. It's pretty close to gamma max. It doesn't appear to be picking up a lot of delta. Gamma's increasing into earnings because IV's driving up. Looks like IV is way the fuck out of whack. So options are massively overpriced on it, but they might continue to get more overpriced. So you could long vol. I mean, that's generally the strategy there. If an earnings isn't highly anticipated, IV is going to rise into earnings. And so there's a window of opportunity there where you can make money off going long the volatility of the underlying. However, you don't want to carry that through earnings because then volatility usually crushes out, which it looks like it does pretty consistently on Roblox. And given its positioning here, there might be an opportunity to like short vol into the actual earnings. But I'd probably want to do it with something that's not directionally exposed. I know bull slipped. It's like the banana, like the market's just littered with banana peels today. Can you give us an example of who you would consider a Cali 10? No. I want my type to remain a mystery to everyone. That way you all think you have a chance. Waste of a milestone chat. There'll be another one next month. Mine's Janet Yellen too. Using gamma neutral again. Just a 20 minutes of X replay. I feel like you'll like my port. Ask me in 5 to 10 minutes. Give us the dumpies. Hmm. Hmm. Kirk's an Avril Lavigne type of guy. Just damaged enough girls. Hmm. It's been 5 minutes. I don't know. If we break through GN, we'll probably drop a bit. But so far, we're kind of holding on to it. And we really need to break through both. So 40 and 35. I'd say if we move back into positive delta, which we're not quite at yet, maybe there's a chance that we run a little. I don't know how much. Yeah, right now, we're both testing GN on the monthly contract and the intraday gamma flip. So if we lose this level here, we're gonna flip over to negative gamma. It gives us room to about 60-30. Not much room below that right now. Although, I guess if we get enough momentum, we could keep selling off. Upside breakouts at 60-41. Ooh, nice. About a 4,900 for tomorrow. Am I fun of prompt? No. Are you into robots wearing muddy jeans? No, I don't think so. With that smirk, I know I got your type perfectly. It's more complicated than that. Way more complicated, unfortunately. Hmm. Hmm. A little bit of vol shorting coming on. Testing the delta flip. on that move up. Hmm. And gamma goes negative here. Again. Make it a lower low. Oh, there's a breakdown through GN. Left a gap to the upside. '30s support. If we lose 30, we can move down a bit more. How far? Maybe like 25 or 20. Probably just get support here though. Yep. Big support. Upside could test 50. Hmm. Two minutes left. Pump it. There we go. Lame. Jesus Christ. Ah. Fuckers. Kenny did win. Alright. No positive delta for the Bulls. So we moved down a little bit in between where I expected us to end the day and where we actually ended the day. Oh, wait, there it is. Or well, the market maker priced in like 75 points to the downside. We got about 47 of those. We did have an intraday low, much lower, near delta neutral. Brief test of that. We kind of rocketed back up during the FOMC meeting. Futures is mostly chopped down from like the earlier 61.10 test this morning. We got a test near 60.40. We might lose that overnight, given that we failed to regain 78 here. I would give me like a downside target around like 26, 25 for the overnight session. Obviously, earnings will play a big role there. We'll still have to see how those come in. Dollar moved up today. Definitely not the high of the day, but up pretty steadily. Alongside yields, which moved up incrementally off of the deep drop that we saw on them yesterday. Not a lot of change here either. I mean, the Fed didn't do anything, so wouldn't expect much to happen. ES closing down 68 points, NQ 52, Dow 50, and Russell mostly unaffected. Commodities up a tiny bit. Looks mostly like agricultural, industrial metals. Some precious metals moved up. Energy down. Correlation moved down really hard today. Unfortunately, that didn't seem to do much. So a big push into the dispersion trade prior to earnings, which could be expected. Everyone wants to try to long the vol and the underlying before the big earnings because I mean, even as a sympathetic move, you can move into a lot of equities that would run alongside positive earnings breakouts without having to overpay for the volatility. The carry trade moved up a little bit today. Leverage closing the day out at 0.89, which is roughly where we closed yesterday. I guess a little bit higher. But leverage moved up pretty steadily on the 6 and 3 month today. We had a brief moment there where the forward yield of volatility turned positive. That was following the NVIDIA news regarding tighter import controls on exporting AI chips. Obviously, you know, that recovered really hard in the Fed meeting. We ended up with the forward yield on volatility down to 2.53% at the end of the day. Bond vol moved down yesterday, probably going to move down again today. Not a lot of exciting shit going on with bonds right now. Not until we get closer to probably like the employment and inflation data. Skew moved down yesterday. Might see it move down again today with the loss at 60.50. That's a major support. We definitely closed below it, and we closed a little bit below gamma neutral too. So there might be an increased demand for volatility in the overnight session as well. 74.55% of the S&P above its 20-day moving average, starting to fall off, but hasn't substantially. The correlation between VIX, cash VIX, dropping again today, down to 74.68. So still getting a lot of vol shorting. I think that was pretty obvious on the bounce in the intraday today. Fed funds futures priced out a little bit of the one rate cut they're pricing in for the year. And then it looks like the bear steepener came down a little, although I think the intraday high was probably a little bit more significant prior to the Fed decision. Looks like it got up to about, like 35.9, so 32.5 now. Again, still no inflation data and no change from the Fed policy, so we're probably not going to see a lot of moves there for a little bit. And then on the technical side of things, we retested the local, the upside of the local downtrend, and bounced off of that. That's also the long, like one of the long-term trends right there. If it goes back to that might be like the 1929 one, but it scales weird on the daily. So just happenstance, but we still haven't retested the EMA 30 or the MA 50. This still isn't bearish yet. Not really. We probably need to substantially lose like 60-31, or drop below the EMA 30 and 50 to confirm anything to the downside. So I would say we're still in a pretty neutral positioning going into the earnings tonight. Tesla's down 5%. That's a good start. Yeah, so we're already pushing down for that 60-40 level on ES. EPS 73 cents, estimated 75. Fourth quarter revision 25.71 billion versus estimated 27.21. Who would have thought that a car company whose profit comes from selling cars would make less money selling fewer cars for less money in a high interest rate environment? Not me. I know. I know. I'm just saying crazy things. That's a significant breakdown on Tesla, by the way. If it loses 30-60 in the overnight, it's quite bad. Hey guys, I think it's a bubble. No shit. Yeah, I don't think it took being a stock god to figure that one out. Anyway, that's it for the day. Thank you all so much for tuning in. I will see you tomorrow. Have a great night, everybody. Later.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.
It's yours?
No,
My mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's
Where
not.
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.